Alana, hey, how you doing? Good to see you again.
Likewise. Good to see you.
Yeah, so round two of our conversation, because we talked about all sorts of stuff, mostly around onboarding last time you were here. And I've been spending a lot of time thinking about compliance, weirdly. The reason being, I have a lot of clients that are considering either affiliate or social media, and compliance just keeps coming up as something that they need to think about and solve for. Let's just start off with blind spots. What are the big blind spots that FIs have when it comes to affiliate marketing? And what are some of the consequences that you see them face when they don't address them correctly?
Okay. I mean, we think about this all the time, and it's something that is so important to really set expectations across the entire organization that's going to touch affiliate. So I really thought about, how do you synthesize this or distill it down into kind of bite-sized chunks? And the shortest I could make the list was 6 things. So these are my 6 things I would say when you're thinking about blind spots to consider for compliance. The first and foremost, which is kind of the easy one, is partner vetting. So when you're working with a third party, what are your kind of rules or parameters for how you're going to evaluate or expect your partners to work with you? And what are the things that are most important to you? How do they market? What tactics they use? Segments that they're speaking to, lead selling, anything related to their content mediums. Partner vetting is a big one. So what are your check boxes for that to make it really easy for you to systematize kind of who's welcome as a partner to your brand? Number 2 is content accuracy. I think a really big one, and it's such a struggle, is as you scale out your affiliate program and you have, dozens of partners that may have dozens of campaigns live, it's really easy to lose track of those campaigns, and it's easy to lose track of what they're saying about your brand, particularly in areas and products that have information that change frequently. Those are the times that it becomes important to have systems that can allow you to keep an eye on that content and have an easy way to update that content with your partners. In credit cards, it's annual fees, balance transfer offers, you name it, anything related to cards products. In deposits, it's high yield savings rates that change, any promotional offers, checking promotions on the banking side. Lending and mortgage is a little bit less fluctuation depending on how your product's being presented. But all in all, I think that's a really big one, is how are you actually managing for the regulations related to those products? So things like UDAP, Reg Z, Truth in Lending, Reg DD, Truth in Savings, it all applies to your affiliate campaigns. And so you kind of need to have a handle on how you're going to manage things, not just before they get shipped and published, but ongoing. So 1, partner vetting. 2, content accuracy. 3, I'd say getting your compensation models correct and understanding the regulations. Marketers that work in the affiliate space they need to educate themselves around what these models look like. I think those new to affiliates are the ones that maybe struggle the most. And what I mean by this is certain regulations limit the models of how you can work and compensate your affiliate partners. Number 4 is disclosures. So disclosures are really important. The regulators want to see that if there is some sort of commercial relationship you have in an ad placement, whether it's a listicle, whether you're in a comparison table, there's a dedicated review. Generally speaking, the partners need to have some language affiliated with the campaign or that page or placement that acknowledges and lets their traffic know that's on site that there is likely to be an affiliate or commercial relationship involved. And there's layers to that, in the investment space. In some cases, you have to disclose the actual amount that's being compensated, which then from a technical standpoint creates more intricacy to how you work with your partners and landing pages you're directing them to and disclosure language within your terms and conditions. All of those things affect it. So disclosures is a big one. Data capture is another one. So making sure number 5 is data capture. And that means depending on the geos that you're marketing in, understanding what's allowed and what's not, what permissions you need to get from the consumer to capture and track that information. And we've done a lot of work here in really kind of understanding how do you collect the minimum amount of information you need to do attribution without actually capturing what's defined as PII. And then also, there's things like the FCC's ruling around lead buying and like the one-to-one consent rule, being aware of that and making sure your partners are abiding by that. So data capture is a big one. That's the fifth. And then the sixth, which was the last minute bonus item I was thinking about, is audit readiness. I think especially for fintechs that are offering either neobanks or lenders that have, sponsor banks or banking as a service partners that are their licensed partners on the back end, they are held to a certain regulatory standard and need to provide a certain amount of rigor and oversight. So making it really easy for you to have, records and a history of all of your campaigns and documentation of how you've worked with these partners is really important too. To go into like real world examples, I've had fintechs who come to us and say, we had what they call a fire drill where their sponsor bank is like, I need a history for the last quarter of every single campaign you've run now. And they're like, crap, how am I going to get that? Those are like examples of where the auditing piece comes into play.
Where would those audits generally come from? Is that like a regulator asking or like a partner bank? What have you seen in practice?
It originates from the regulator. So what happens is these banks go through basically auditing cycles depending on the size of the bank and the size of their partner program. Generally, the larger the program and the larger the number of fintech partners they have, the more frequent their regulators are coming to do their due diligence. And so when that happens, there's a certain set of standards that they have to provide from a reporting standpoint. And so generally speaking, there's a very close, intimate relationship with compliance person at fintech that works with compliance person at bank. And so I think we're seeing a big sea change over the last 12 to 18 months. And I mean, CFPB is in a very different state than it was last year at this time. So maybe things will lessen a little bit, the rigor and expectation. But I think regardless, the fintechs that have proven and have survived the tumultuous period of consent orders and FDIC identified issues and fining that was happening, I think the fintechs that have survived that already have that right rigor in place, and they have a compliance person that owns that function. So it's a lot more slipstream. But there are periods where, if you don't have an easy way to be keeping track of all of these things, it's a big problem.
Got it.
Yeah.
Okay. So like hearing your list, we're like pivoting to consequences now of the blind spots. I think you mentioned a number of regulations, Reg Z, many others, that if banks don't comply with, they're going to be in hot water with the regulator. So clearly there's the whole regulatory, fines, etc. There's also the like consumer, there's always litigators out there looking for lenders that are not abiding by the list you just walked through, class action lawsuits, etc. But talk us through like maybe the business consequences here. Are there real business consequences here as being pegged as a lender or a publisher that doesn't have a great track record on the compliance side?
It's interesting. It really impacts every aspect of a business. It'll impact the customer service team. If a consumer goes to customer service person and says, I was promised this rate and you need to give me this rate, there's a direct ripple effect. And then, they go to a Reddit feed and the thing blows up. And so from a PR reputational standpoint, from a business operational standpoint, it can create kind of quite ripple effects. And not to scare people off from doing affiliates, because this is easily avoidable. It is just something to consider and a very real possibility. And having the right kind of protocols in place should a scenario like this happen. I think the other thing is, from a publisher standpoint, some of the big card issuers, they have very, very short strings. So if there's one violation or two violations, and in some cases they have point systems. So if it's almost like a driver's license where if you lose a certain number of points, you're out and you lose your license. It's a credibility point that you may lose your permission or trust from an organization to want to work with you.
Mm-hmm.
That's a real business reputational risk from a publisher standpoint.
Now that we understand the problem a little bit, walk us through the typical workflow. Like how do FIs generally handle this? And is it manual? Is it automated? I guess, help us understand how the FIs you work with actually kind of deal with this all in the real world.
It's a spectrum. And I don't think there's a right way or a wrong way because every business is going to be different. I would say a majority of them, when they're starting out in the space, even for their own marketing, and then when they start to venture into working with third parties that they have to worry about, they're doing it manually. I think those that are quite serious and really invested in the channel, and or their leadership prioritizes compliance and that becomes an investment that they're willing to make very early on, then they choose to invest in solutions to help them more proactively manage it. And then the last is the maintenance and monitoring. Maintenance, I distinguish differently than monitoring because it's about product management and making sure that the information that's in these campaigns, because I'd say 80% of the affiliate campaigns we're running in financial services are what we'd call evergreen. So it's an evergreen listicle, an evergreen comparison table, a product review, and things change and they need to be updated. And so what's your process for maintaining accuracy of that content? And then the monitoring is ongoing. Like, let's say if nothing changes and you just need to make sure that you know where you're being mentioned, controls that, you know, your campaigns aren't living on some site you didn't agree to, and then having documentation of that over time for those auditing moments where you need that kind of record in place.
If I'm a fintech, I would love to outsource some of this and have technology run it. Like I'm imagining myself writing up a document saying, "Here are my requirements. Here's my product API. Is there are there AI agents or a platform or something that I can trust to do all this monitoring for me and that can actually give me reports that say, hey, here are all the ads that you served. Here are all the ones that were compliant. Here are the ones that had issues. Here's what we're doing to fix them." Do solutions like that exist? And if so, like what are they? And walk us through kind of the landscape there.
It's an evolving space, and the last 18 months have really accelerated development in this area because the FDIC and the CFPB were very active. You know, for those who are unfamiliar, maybe don't pay attention to the space as much, there were so many consent orders thrown around because fintechs were in violation of a lot of the regulatory restraints and requirements I mentioned earlier, fair lending, UDAP, and, you know, how audiences are marketed to, calling themselves a bank when they shouldn't. I mean, there were so many variations, offers being wrong in content campaigns, questions around, you know, how things are prioritized on publisher sites. So I'd say now it's become an expectation and a standard almost that something is in place or you have some systems to help manage this. And especially, as I said, as you get bigger, it becomes more urgent for you. It's always important, but it's not always urgent. And I think, you know, if I think about it, you know, probably up to a certain number of affiliate partners, up to a certain amount of campaigns you're running, you could handle it yourself. You get to a certain threshold and then you're growing at a certain rate. And then you have a certain amount of partners that you have to manage. At that point, it becomes a lot more pressing where you probably need to be thinking about, you know, what do my systems look like and can I put something in place? So thinking about the tools that are out there, you have the foundational, I'd say. There's some big players in the space that have been around for a long time. My understanding is they've been built for different purposes and kind of serve the needs of some of the functions we talked about, but maybe not perfectly. So I think about like PerformLine and BrandVerity are probably the biggest names that get thrown around in this space, and they're amazing at what they do, and they do a lot. So, you know, I think about a fintech starting out, they may do more than what you need them to do, or they may not necessarily fit easily into your workflows, or they may. But I think what some of these tools do well, like a PerformLine does a lot of brand listening. So thinking about where you don't even have a commercial relationship, but where you want to know where, you know, you're being mentioned in the internet. The pro of that is you have huge visibility. The con is that as soon as you get that information, you have to do something with it. And like you get buried in a lot of information. And so you just need a way to kind of manage that, how it gets captured and managed. In other ways, some of these tools are built to like manage PPC, competitor keyword bidding, and, holding your partners accountable and alerting you of when people are bidding on your keywords, or, use of brand creative is in violation of the brand guidelines you set. There's tools that will scrape and capture and automate a lot of this. One of the reasons we actually built Fintel Check internally was because we felt like a lot of the manual processes we were doing, we needed to find a more streamlined way to manage it, and we couldn't find a tool that would easily plug into what we were doing. And so we said, screw it, we're going to build it ourselves. And it's very specific to kind of what our needs were. And that was around kind of finding where your campaigns where you have a commercial relationship are, and then having a way to automate the evaluation of that using a rules engine. So that's more content accuracy from a compliance standpoint. So just, instead of us having to kind of spot check all these campaigns, automating it. And then we take screenshots of the campaign so that we have that auditing history. There are other tools out there that, help to manage this. For example, there's a tool pretty active with some of the core providers that work in the fintech sponsor bank space. One comes to mind called Themis. They're more of like a workflow campaign review process. Red Marker's another one that they do. They're kind of asset management, like campaign and asset management and campaign review product. A lot of FIs use. So these are more like bigger players in the space. And there's a lot of other products kind of coming up on the scene. But that shows me that there's a need and there's enough of a market here. It'll be interesting to see kind of their specializations and how they fit in, because at the end of the day, we're not just talking about marketing using it. It has to fit into the overall org and workflows that the team more broadly use. So product and how product manages, your legal, your compliance and risk, they all will touch this in some way. So how does it fit into how you guys manage things?
If you want to support the show, the number one thing you can do is go to thefreetoaster.com and sign up for our newsletter. You're going to get a couple pieces per week of news, information, insights, and podcasts like the one you're listening to right now at the intersection of marketing, lending, and technology. That's our niche. We don't plan to go outside of that. It's the only publication I've seen out there on the internet that dials into this zone. So if you want to support us, sign up and share it in your favorite Slack channel. Speaking of these tools and kind of automation, are there any examples you can think of where the FI, caught a big problem early with like these either brand listening tools or, tools that help you kind of sanity check ads within commercial agreements? Like I'm looking for a story where this like saves somebody's ass and like how that all went down.
The one that kind of comes to mind, I would say, is anytime there's a changeover in product information. I think that's the biggest one. You have your kind of standard ongoing product information that lives in your third-party partner sites. But usually it's when you have products that have informational changes. And there was also an announcement of a new feature in the product. So that was another thing that was pretty critical. And so what happened was, you inform all of your partners that this is coming. They generally have an SLA for turnaround time to update the content within their campaigns. And then we run our tool. So this is in the case of us managing a program. We run our tool, and a number of partners hadn't updated their content. Two of the contacts had been on vacation. So, there are cases where you're going to get anomalies, and it immediately basically pulls and identifies the specific URL where those campaigns are living. So it makes it really prescriptive and easy to be able to say, hey, these are outdated and like we need to get on this right away. And the other thing is we track the traffic volumes on those pages. So preemptively, I see this almost as like an insurance policy for your campaigns. But we can quantify what the potential impact is for a period of time that campaign, let's say, was out of date, so that if for whatever reason a regulator says, hey, this offer's out of date, or this is missing this disclosure language with this, promotional offer, that you can say, hey, not only was this out, this was incorrect for these 2 days only. in terms of like clicks or impressions this page has generated, it's pretty nominal compared to our overall program. So risk identified as low. There are definitely cases like that where anytime product's changing, and I think like the big issuers especially, like there's a reason that they're so selective with the partners they work with, because this is so critical to them, that making sure you have that tool in place is important. I had a case where we had a sponsor bank. Sometimes sponsor banks use our tools as well, to monitor their fintech partners. And this sponsor bank had a regulator that they were in an active investigation over a campaign. And this was before we started working with them. And they had no record of that page. So the regulators are complaining about something an offer that had lived somewhere and they had no history. And there was going to be a consent order coming down with this and a few other things that they had. And they were like, they had no idea what to do, but they're like, if we had something that was capturing these historical records of these pages over time and having something that could alert us when a page changes. One sponsor bank told me their fintech partners sometimes change their disclosure documents. So like the terms and conditions around the product, the PDF that's attached or lives somewhere has changed, and they never informed their sponsor bank partner. So like the terms of the offer or the date that the offer has been extended to never got approved. And then a regulator comes and says, what's this?
Right.
That's a big problem. So things that as a marketer you don't think about because you're wanting to ship cool offers and get new landing pages live. But there's a line of consequence to that. And that is reputation. It's fines, it's caps on how much you can grow beyond what you as a marketer think.
Now what you're calling the audit history, it sounds like a historical record of everything you've done as a marketer, which like in my time as a marketer in the industry, I don't see as a regular practice. Like that's a time consuming, resource intensive process to do all of that. So the question I guess that comes to me here, I want to just kind of talk maybe dollars and cents for a second. If let's say I spend $1 million a year on affiliate marketing and I don't have an in-house team that I think I can trust to run this compliance program, what would you estimate it's going to cost me as far as dollars and maybe people time to outsource this? I know it's probably a big range, but give us an idea here.
Yeah. I wish it was a simple answer, but I think with the benchmark you've given me, you need at least some resource internally, whether it's half of their attention, that can be a support structure from a compliance standpoint. So that's a head count of, I'd probably say $100K investment to have somebody that's dedicated to supporting marketing compliance, marketing review, not just through affiliate in general. So they're owning that entire kind of function and have other parts of their job, maybe on the decisioning engine, on a whole range of areas, but somebody that can be partly an analyst to support.
Now, let's talk about the future here for a second. Like what you talked about the problems you see day to day right now, but world's moving fast with AI and there's all sorts of stuff happening. What challenges do you expect lenders to face in the next maybe 12 to 24 months that they're not really wrestling with yet?
Yeah, AI is probably the biggest catalyst for some big seismic shifts in marketing investment. I think especially in the affiliate space, it's forcing brands that have been so dependent on certain types of partners to diversify away from those partners. And I think a big area that they're looking to invest in is the social influencer space. It's a heavier lift to get going, and they can't drive the volumes. So it means that it becomes a quantity game, and working with a quantity of partners where it's a lot harder to control content means a kind of different beast. But it's a very kind of evergreen, net new, interesting area that more and more fintechs are diving into. And the AI layer enhances the complexity of that because of the controls of content. These influencers that can spin up and change and adapt content using AI, and knowing, what's credible, what's real, what's not. That's where, having the right legal parameters and terms and conditions and how you work with these partners becomes so important, so that you have some sense of control with how these these third-party influencers you're working with will work. So that's, I'd say, the biggest thing that, we're going to see a lot more people diving into it. But it opens a whole new can of
Yeah.
worms with how you
To
manage
me,
it.
it's like if the complexity level of what we've discussed so far is 1, what I see coming is a 10 or 100. Like it's not a 2 or a 3x. It's like orders of magnitude. And you mentioned just like if you're gonna play the social channel well, you're gonna have a very long tail of influencer partners. You might have versus on the affiliate side, you might have 10 key partners. If you're gonna play social media, you might have 10,000 influencers that are on TikTok and Facebook and all over the place, right? So that there's that challenge. But with AI, I also see, and you alluded to it, is the creators aren't making one size fits all content anymore. I wouldn't expect them to with AI. They're going to understand their audience and they're going to know actually there's like 50 user types in my audience. And when I shoot this video, I'm going to do it with AI and I'm going to deploy 50 different flavors of that video because they're going to hit differently with different parts of my audience. And that's coming too. So now you have the multiplication of way more publishers and way more customization and content, and it just blows up this whole thing. I'm just curious because I know Fintel connects lenders to influencers as well as traditional publishers. What are you seeing on the influencer and social media side? Like, how much is that growing? How much are lenders spending there? Um, do you see it changing dramatically over the next couple of years? I'd love your take.
It's interesting because we would love to kind of own the influencer function in some ways, because I think influencers need to be measured and held accountable to the same metrics that an affiliate would. So very bottom funnel performance metrics. And very often it's not the case. A lot of that has to do with the commercial models that the influencers expect. So upfront media costs or, video production costs, and then maybe there's a hybrid CPA component involved. And that means it tends to sit with brand or communications and less so on the kind of performance side of things. And we so often get bucketed in the performance side of things, less on the brand. So that for us, it's interesting to see how that kind of split of investment looks. The fintechs or lenders we work with that see us as that extension means there's a larger percentage of the budget that would go to this channel versus the other partners where we may have a great opportunity, but the flat fee is too high. And so it gets moved over to another department, doesn't sit with our budget. So I'd say the simplest answer is a very small percentage. I mean, if you think about the big publishers and if influencers are being compared to that channel as its own kind of separate adjunct, it's minuscule compared to what's being spent in affiliate. But I think the potential for it to be a bigger piece of the pie, and the appetite for it to be a bigger piece of the pie is there. And I'd say if we can get it to 10%, we'd be happy. I think that's a healthy kind of barometer to try for. But right now, I'd probably say it's the single digits for sure.
Yeah, that would have been my guess as well. I've seen lots of companies in that, or like you called it drunk on the performance, the that I tend to see that in like maybe the first 5 to 10 years in the growth of an organization. But eventually you hit your limits within these competitive marketplaces, right? Like eventually you're going to hit a market share that it's going to be hard to grow past within LendingTree or within Karma or within Bankrate. You're going to hit a cap. The same thing happens in direct mail. Like there's only so much profitable stuff you can send before each incremental mail is NPV negative and you have to stop mailing. And then what takes a brand over the top, I look at a brand like SoFi. You read their earnings reports, they're killing it. And it's not just because they're doing well in affiliate channels. Like they have stadiums, they're doing brand marketing all over the place, right? So any reasonable company can eventually figure these out. And to me, there's a lot of art and complexity that goes into that next level. Like if you want to be a SoFi, there aren't that many companies in that tier. But I expect we'll see many fintechs that are, 10 to 100 billion, but you're not going to get there on just affiliate marketing and direct mail, which is what that's like the most common mix. And I just think if you're not leveraging social, like you're missing a big, a big part of that. You hit on AI a little bit earlier, and I'm curious, are you seeing publishers lean into that at all? And if so, what are they doing with it?
Some of them are earlier in their evolution than others. I mean, the obvious answer is with content production and efficiency of managing content. Um, the cost of kind of carrying large teams is now prohibitive, especially with the LLMs coming in and impacting the, commercial viability of some of these businesses, and they're having to pivot their commercial models and how they drive traffic. So I think production efficiency is a really big one. And I think we talked about this actually earlier, the other day. You get content providers that are producing content or have like Substacks or other content distribution mediums that help them build their visibility in some way. There will be a sea change at some point with this no-click model where the LLMs are still so dependent on these publisher sites and content. And so when the sea change happens and then they have to figure out, and we're working on this, we're actually working on a research report on this and like the role that affiliates play in the results. It helps when the more coverage that they have, it kind of justifies the halo effect they're creating and influencing buyer decisions when people are shopping for fintechs in these platforms. So I think it touches kind of all areas of their business operationally, but then strategically, where are there ways that they can ride the wave and be ahead of the curve and, be future planning their business model so that, they can take their business to that next step. And the ones that are feeling the most pressure are the ones that are very content driven.
I just was speaking with a lender this week actually, and their comment was to the effect of, we have, one of our publishers that leans heavily on SEO. Their traffic's down about 30%. Their their answer to that, at least in the short term, is to buy more traffic. I presume it's going to be in SEM and in social. And so effectively, they're getting more expensive traffic flowing through their rails, and the quality is actually deteriorating, was the other observation. So the paid stuff that costs more money is actually converting worse than the organic stuff. It's kind of this double whammy where publishers are, the LLM is kind of redirecting traffic, but then when they go out and buy traffic to replace it, it doesn't work, and that just feels like a really tough position for a publisher to be in.
I spoke to someone the other day about this, and they said this years ago, that, the businesses that had built closed environments or ecosystems where they own their own audiences are the ones that are most shielded from this. So, Credit Karma being an obvious example, but some of the big, publishers that are more content driven, but have found a way to kind of build those dedicated audience groups, whether it's subscribers to a newsletter, they launch their own kind of fintech product. There's tools out there to help, brands build relationships by, giving them access to kind of credit tools or ID protection tools, like value add things that get them as part of your ecosystem that you can then remarket to. I think we're seeing shifts in that way. So partners being more forward thinking, but you're right. The short-term band-aid is, you have to find ways to kind of source traffic elsewhere, and paid is kind of the quickest way to do that.
Do you expect lenders to be spending more or less the same that they're spending with affiliates today? More or less? Like, what directionally do you have a prediction? I know all this stuff is disruptive, but to me, it could go either way. So I'm curious what your outlook is.
My outlook is they're gonna spend more. My outlook is I think actually, maybe contrary to the lender that you were speaking to, I think quality that comes easily attributable to an affiliate will be higher, because you're getting people who are really intent and actually serious about doing their research and wanting to go to these third parties to kind of get this information. So I think you're going to end up paying maybe more, and you're going to have to work into your model what that halo effect is of affiliate and their influence in the LLMs. And I think affiliates need to be able to justify their existence and be able to measure this in some way. Because the reality is, if you're not on these affiliate sites, and part of the study is like a sneak preview is, four of the major LLMs, like 70 to 80% of the references are affiliate sites. And then we're diving deeper on like, where do you have to be on these affiliate sites if you want to show up in the top high yield savings accounts or top no fee credit cards? And like NerdWallet right now dominates. Bankrate is a close second, but they are the most referenced source for these LLMs. And the LLMs are creating their own content. They're dependent on these third parties. Whereas Gemini source 70% of their sources are actually directly from the FIs. They don't want to source the affiliates. It's super fascinating. I mean, I'm totally geeking out on this data. But that's, I think, one of the big components to when you talk to brands and they're saying, how are you going to still help me grow my business? That's a big piece of it.
In the example you gave where NerdWallet was cited in the LLM, do you think NerdWallet in that case is going to earn the click and the traffic and be paid for the referrals they get? Or are there chances that the user reads the recommendation from NerdWallet and goes straight to the FI and like somehow they're cut out?
The latter is a possibility, and I think as time goes on, it may become more likely. My feeling is for those savvier audiences, there's not the same level of trust in an LLM just yet, and trust is so critical. So when they're, I think, shopping around, they're probably likely to want to click through and read more, do a bit more due diligence. So I think right now we're still seeing, good volumes and good traffic coming through from these partners. And I think as trust and the accuracy of what's coming through these LLMs improves, that may shift.
And I could see a potential shift as well. If I'm NerdWallet and I'm reading your report and I'm seeing, wow, I'm present here. I'm actually influencing decisions. Lenders actually want to be in my site because of this halo effect, not only the direct traffic. You may imagine a world where they start changing their business model. You pay to be listed. There's like a fee. Like it's not just direct performance like it has been historically because the attention starts shifting externally. But it is their content. So like I could see some shifts that look and feel like that. Probably even within the next 12 months, to be honest, because this stuff's moving pretty quickly. That's going to give a lot of performance marketers anxiety to have to spend money and not be able to attribute it back to accounts. So back to the addiction that you mentioned at the top of the show. So thank you for walking us through here on kind of the compliance side of things. I expect there will be some folks listening to the show that may want to contact you. So we're going to drop your LinkedIn profile most likely into the show notes. Any other closing thoughts you want to leave us before we wrap?
I just want everyone to feel optimistic as opposed to doomsday about what's going on. I think, necessity is the motherhood of invention, as they say. So, we've gone through these iterations over the years. Google algorithm changing, new platforms coming into the mix, regulation shifts. All of these are just creating new challenges and new opportunities if we look at it. So I hate to be the eternal optimist, but yes, compliance is a pain in the what, but it's necessary and will set your business up for success long term. Shifts in the markets currently and what are some of the challenges and headwinds that are coming our way. To me, those are opportunities to future-proof your business. And we talk about it in our business as like a tap on the shoulder, a punch in the arm or a kick in the guts. Like, I think it's a punch in the arm. I don't think it's a kick in the guts yet. But I think those that have already kind of started to pivot and look at it and adjust the way that they have with every other headwind that's come at us as performance marketers, I think you'll be just fine. So that's what I would like to leave it on a positive note.
I love it. I love closing on an optimistic note. For anyone that listened to either part 1 or part 2, there's a part 3 coming with Alana. It'll probably be in a few weeks, but we're going to be talking about deposit products, which is not something we cover in depth typically on this pod, but we're gonna go there, and excited to have that chat in a few weeks, Alana.
Amazing. So am I. Thanks so much, Carlos.